Hello guys, this is Daniel Salazar. Once again, I just wanted to make another video to show you pretty much the potential that it has to pretty much form these Excel sheets that you can grab statistics from, because it more or less shows you, how far do they tend to like spike up or spike down, and that'll give you an edge every time when you're trying to trade. Especially as a short seller, for me, one thing that I really like to know is how much do they spike? How much do these stocks spike? So if you can see here in my column, pretty much what spike is that I get the percentage from the opening price all the way to whichever the highest price is. For example, this is ONMD. I'm going to go to the 5-minute chart. This is the opening price right here. It's going to be at 1.04. You go to the highest point, you're going to see that it spiked up 18%. You go to the lowest point, you're going to see that it spiked down 24%. So it's always very important. It's always very helpful to understand how high some of these stocks are going to, how high do they spike on the, like an average or on the usual. So one thing that I like to do, so to start off, you're going to see I'm going to sort them by spike. Okay, I'm going to get by spike. I'm going to put the largest at the top. This one, as you can see, everything that's highlighted is anything that has spiked over 70%. Now you can try by colors to see it pretty much. It'll just help you when you start sorting them and playing around with the data. You could do anything over, say, 30, because usually that's usually where I like to start. If it ever does spike to like in the 30s, I do like to take a short position, usually around there, around a 30% spike. Let's put that blue right here. Okay, so now you have green for 70 and up, blue for 30 and up right here. So now you could sort it by market cap. That's one. I mean, you could sort it. I mean, there's a ton of ways that you can manipulate this data. You can play around with it. You can filter it. You can divide it. You can put it in sections. You can put market cap from 0 to 50, and then start another group from 50 to 100. A third group from like 100 to 150. There's so many ways that you can play around with this data. So as you can see here, there aren't that many stocks that reach 70, because it makes sense, because most of the market cap are just the higher market caps. They're like 1,900,000,000. As we keep going down, you start seeing smaller and smaller market caps, 600, 500s, 400s, and then around the 400s is when you start seeing like 70% spikes. Do you guys see that? I hope you guys can see that. Hopefully you guys can understand it. Not to mention, the ones that tend to spike the most are the caps who have the smallest market cap. So if you scroll all the way to the bottom, you see how many greens there are? There are a lot of greens, a lot of stocks that tend to spike all the way to 70. And usually the ones I've noticed, the ones that spike the most are the ones that are less than 10 million market cap. As you can see here, we're already in the 6 million market cap, 5 million market cap. I mean, these are so small that they're very, very volatile. 4 million market cap, like 3 million market cap. Look at all this green right here. That's a lot of green. That's a lot of stocks that tend to spike 70% and up. 70s and 30s. It's just loaded with so if your strategy is to go long, this will definitely also help you. You're going to start learning more or less which stock market cap, which market cap is the one that you're going to be targeting if you want to go long. Me as a short seller, I usually tend to short the ones with bigger caps, because those have less potential of spiking up. I want them to go down, and if they go up, I don't want them to go up that much. So it's important that that you keep track statistics like these ones, because this is just one way that you can sort them by cap. Then you could sort them or sub sort them by float. If you sort them by float, of course, the bigger floats. Where's your float? Okay, these I don't have a float because these are mostly like IPOs. They do not have a float. But as you can see here, this is for 1 billion market float, 800s, 500s. These usually also don't spike up that much. The ones which, to no surprise, are gonna be the ones to spike the most are the ones with the smaller floats. As you can see, we're at the 200s. We're down to the 100s. And let's keep going more and more down. 90 million market float. Let's keep going down, down, down. 25s. You start seeing some, as you can see on the 25, the 20s floats. You can see some 30%ers. You can see 170% spike. And then usually if you go all the way to the bottom, like to the micro floats, to no surprise, these are the ones that have a ton of spike ups. They go up 70%, 30%, and anything in between, or even more, 300%, 111%, 165%. So having an Excel sheet like this is really going to give you an edge, because not only can you sort them the way I just did, but you can start sub-sorting them. So you can first, like I said, you can first sort them by cap, and then divide them by market cap, and then sub-sort them by market float. And then you can even keep going beyond that. You can go into pre-market volume. You're gonna notice that usually the ones that have a higher pre-market volume, they tend to react differently than the ones that have a lower pre-market volume. So the ones that have the volume, the average volume, average dollar volume, also the gap up percent and the pre-market decline. Pre-market decline is also one of my favorites. Pre-market decline, just as an example, pre-market decline is pretty much once the market opens from the prior night. If you go all the way during the pre-market hours to see how high it went up, I call this the gap up. This is 237% gap up. Now, during the pre-market hours, right here, all the way to when the market opens, I call that the pre-market decline. So that in this case, it'll be roughly a 15% pre-market decline. Once you start noticing that a lot of these, the ones that have a higher pre-market decline, meaning that it has gone down the most, those tend to give you a really, really good returns. If you decide to go, if you're like me and you decide you're more short biased, you're more bear biased. And that's to no surprise, because the more the stock has gone down, for example, from here to here, say in this case, it went down 15, but if it goes down 20, 30, 40, that's a clear indication, a clear sign that this stock is dead, or it might be about to die, or it just lost power. It keeps going up, up, up. There's a point where it just starts going down, 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 and then it starts to lose momentum. It starts to lose power. And as a short seller, it's a great tool to have. Like I said, not only does it help you short sellers, but if you're going long, and if you're going short, more or less, once you start sorting them by price, you're gonna start noticing that some of these, they do tend to group like around say for example 30% spike. Usually a 30% area is the area where you would like to hit a short position. And as you can see, data like this can really come in handy. And there's just so many ways that you could sort this. You could sort it by extended, by pre-market decline, and this is not even like half of what I have. I mean, as you can see, I have a lot of these columns that are hidden. It's just too much data that I've been collecting. But once you start playing with the data, you're gonna start noticing some very, very interesting patterns that could be very helpful. Okay, guys. So I just wanted to show you guys that. If you have any questions, please let me know. Don't forget to comment and subscribe. Thank you.